Today's date is Sunday, April 26th. Wow, this year is definitely getting on, right? Like it's on the move. We're almost to the summer, right? So it's safe to say that we're well within this year, and I'm just curious to see who is actually still putting in that work, pushing towards their goals, and staying dedicated to the daily routine and the daily monotonous routine of creating success in the lifestyle that they desire. And I like to start off these calls with a little bit of mindset. And like I'm not no preacher or nothing like that, but one thing I will say is, I received a message today that I felt like was very important, especially for people that are on their journey in this trading game, in this trading industry. And it was just talking about the power of persistence. A lot of us have the energy to start something, the energy to have a desire to do something, but not many people have the desire, the energy to stick with it long enough to see the results, right? And it's unfortunate because there's a lot of good people. There's great people out there. You do what you're supposed to do. You got a big heart. You take care of your family. If you're a parent, you might be a great parent, whatever the case may be, but you just lack the grit of fortitude and that longevity game that it takes to succeed in trading. And I feel like this is something that you need, especially in trading, more so than any other industry specifically, because it's such a mental game. It's something that takes such a mental strain on you that you have to really truly challenge yourself in ways that you don't have to in a lot of other areas. But there's a lifestyle and there's a life that's waiting on you that is on the other side of persistence. And a lot of people they don't get to it unfortunately because they're in their season of planting, but you're ready to be in your season of reaping the reward. And it happens faster for some people. Sometimes it takes a little longer for others. But the moment you realize that, your journey is not going to look the same as everybody to the left or to the right of you, and you commit to, this passage of growth, and this lifestyle change, it's something that you become. It's not something that you just do. And, that's okay. If it takes a while, that's okay. Really thinking about what it is that you're asking for, to be able to push a button and make life-changing income. This is something that will not only change your life, but the trajectory of your family's lives, right? You're going to raise your kids different because of this skill set. You're going to take care of your family different because of the skill set. So I want you to, realize how much magnitude this goal that you have really has and understand, is it worth 3 years, 5 years, 10 years, right? You might put 5, 10 years into this, and then that following year is the year that everything happens for you. In the message that I was listening to earlier today, it was a church message, and he was saying, God is going to pay you back for all the time you spent on trying to achieve this goal. And in the world of trading, what that looks like is you losing money or just not making money for years. And then that one year it clicks. Then you have a 20K month or a 30K month. And you do that consistently enough to where the 5 years of stagnancy has been made back in 6 months' time or a year's time, right? And this is how it happens in this game, in this trading game. So I've seen it time and time again. I've had the luxury of helping tons of traders, and I've seen it with my own two eyes. One of my best friends, we actually went to college together. Shout out my boy Cam. I mean, he struggled for years. And then it got to a point to where he flipped $1,000 in that 80 grand in a matter of a couple weeks. It was maybe like a week and a half or 2 weeks. Now, I just want you to let that really sink in and let that process, right? Imagine you've been struggling for trading for years, and then 1 month you make 80 grand. And now you just bought back a year of struggle. And then you do it again the next month or the month after that. And maybe you have some up and down months, but overall, you're going to get that time back. God sees the effort you putting in, right? And he's an excellent bookkeeper. He knows the effort and energy that you're spending. And in this world, you're gonna spend time, energy, money. You're gonna spend some form of energy, some form of currency, some form of, of your life in some way or some form. You're gonna have to give it up in order to receive what you want to receive. So I say all that to say this. Don't be somebody that just wants to start things and have the energy to start things, but don't have the energy to finish them. All right. And trading, especially because sometimes you closer than you think, and you might see other people pass you up, and you might see other people look like they live in this extravagant lifestyle, and you don't even know that you're gonna make more than them one day. But you'll never see that if you can't be persistent. All right. So that's it for my little rant. Let's just dive into the charts now. All right. Over the weekend, all right. Some things took place. Again, not much ground being made in the world of the war. All right. Um, Hormuz still shut down, right? Nothing's changed there. Any new updates past that? Not much. Ceasefire has been extended, I think, 2 to 3 weeks. So we'll probably see more bullishness on Nasdaq for that reason. There hasn't been a complete collapse, but it's now stagnant, right? And when the market is stagnant, as we could see over the past couple of weeks, it tends to go bullish because, Donald Trump does a good job of, overhyping our level of control in the situation. Now, even though we've been proven wrong multiple times, he's still the president, meaning his words still hold a lot of weight, whether they be true or false. So, it's not like, we can know he's not telling the truth, so we're going to sell the market. That's not how it works, right? Whether he's telling the truth or not, it's just a simple fact that his title holds so much weight that it does have a drastic effect on the markets, which is why we saw this rapid turnaround in price. What was it? On the 21st? No, no, no. This was actually going back to the first of the month, I believe, or the 31st of last month. Yeah, the 30th of last month. Sorry. So going back to March 30th is when we first had that ceasefire announcement. So it's been about a month now, and we see the market has completely rebounded. And again, I was wrong, right? I was still bearish on this, but that's because I figured the ceasefire when it failed, I figured that'd have a negative impact on the market. But it didn't because they didn't just declare all out war yet. So until that happens, I could see the market continue to move up. I did take some shorts on Nas right before the market closed. However, I took some shorts in here. This was Friday, and I got a little profit here. I can see the market pushing down a bit more. However, I'm not a big fan of the impulses and continuing to sell off on them. So, we had this market converging a bit here. It just came down, took out these lows that were built up here. So at this point, I wouldn't be surprised if the market continues to push up. Ideally, I'd like to see one more run of these lows so that way I can participate more in this particular move because I will not be taking any buys, right? I did close out some sales once the market opened, and I got the rest of my entries just at or slightly above the high that I got in. Now, as we see the market continue to push, potentially make new highs, all right? One thing I just want you to be mindful of is that we are in uncharted territory. So, with us being in these all-time highs, when you look over to the left, there's nothing for us to really mark up, right? There's nothing for us to really, draw off of in terms of an area of supply or anything like that. So everything we do is going to be basically ace entry related. or if you're a ICT guy, smart turtle soup might ring a bell. That's another name for the strategy. I don't really implement it the way that he does, but it's kind of the entry model where you get a high, you take the high, and then that's where you take the entry, right? I call this a ace entry, and there's a few characteristics that I look for, right? So one of the characteristics that I'm looking for is a weak high, all right, which is what we kind of have here, right? We could argue that, this high is strong, but when I look at the wicks in the high, there's not really a strong candle form. And then when you see the bearish candles that happened after that, you have this one big bullish candle, this blue candle, and then the next three candles after that, or the next four candles after that, are very small. All right. So when I see that, I don't believe that there's a lot of strength in this high. So even though it could be interpreted as a strong high because it swept this high, I'm still leaning more towards this high being weak. All right. Because again, we don't really see the strong displacement take place. We see this big drop, but it's important to realize that that is just a gap from the market opening up today. All right. That's not really a true price action move. That's more of just a gap. And we got to take that into consideration. All right. Give me one sec. Go ahead and do that. I just closed another position just in case it keeps pushing. All right. So that's what we have there. All right. So with me knowing that, again, when I look for ace entries, all right, I want to see this high get taken out right here. All right, and once these highs get taken out, this is where I'm going to be looking for potential sell. All right. Once the market comes up here, I'll be analyzing this area for potential reaction. All right. To come down and target these lows at least. Okay. Now, another reason I feel like this can happen is because we clearly have, a build up here. Some people call this like distribution, accumulation, like, Witkoff, like there's a lot of different names for this happening right here. But one thing I want you to realize is like when the market just starts to slow down and it's not making these super large impulses to the upside, and that's like a trending market right there, right? But when you see these higher highs get more and more shallow, right? Like if you see this higher high is very shallow in comparison to this one, and this one is like the higher highs are getting shorter and shorter. That's the market tending to slow down, right? So that's what the market did here. It slowed down from that huge impulse that we've been on, this bullish run that we've been having. Then we get this drop out of nowhere, right? Or it wasn't out of nowhere, it happened over the weekend, but then we get this drop and it breaks lows, all right? So if you're in the mind of a retail trader, what you're thinking is, okay, we have a lower high here, we made a lower low, the market's going to make a lower high and then keep dropping, right? That's what everybody probably thinks if they only paying attention to market structure, but that's also a very simple-minded way of looking at things, right? If the markets were that simple as just marking up a high, marking up a low, and following the direction, the simple zigzag pattern, everybody would be rich. All right, that's what you got to understand. If it was that simple, everybody'd be rich. It's not that simple though. So what tends to happen is you'll get this push down, all right, that draws in a lot of future sellers or, in current sellers too. There's people that sold here. And now that the market has opened up lower, there's going to be more people that try to sell again in this area here when the market creates this lower high. There's people that also see this imbalance and say, look, this is a fair value gap. This is an imbalance. I'm going to sell here, right? And the more people that push that sell button, all right, the more money gets generated above their stop losses, okay? Because when you push that sell button, what happens is, and I've drawn this 1,000 times before, but just in case there's a new trader on the call, I want you to imagine, okay, that this is your trading device, right? Let me do this instead. I want you to imagine that this here is your cell phone, okay? I want you to imagine that this is your cell phone, and trust me, it's all gonna come together here in a sec. All right, so this is your cell phone. This is your trading app. You got your, charts on your app. And then you got your buy button and your sell button, right? This is your MetaTrader, this is your Trade Locker, whatever. All right. So this is your app, and then you have your balance right here. Let's say you have $1,000 right here, right? This money is not actually in the markets. Okay. This money is on your phone. It's not in the markets yet. It's on a trading app on your phone. So what the institutions have to do is they have to get you to participate in order to trap you, right? This money is no good to them as long as it's on your trading app, right? As long as it's, here in your app and it's not being traded, the money is useless to the institutions. And their objective is to get you to trade prematurely so that way they can take the money from you. Every dollar that's won in the market is a dollar that's lost for somebody else. Okay. And you have to think if 95% of traders lose money, then that means that there's 5% of large institutions, hedge funds, etc., that are engineering liquidity, meaning they have to create liquidity in order for them to make money, right? Because there's millions of people that are going to lose, so a handful of select people can win. So, in order for that to even be possible, there has to be manipulation. There has to be some sort of, rigging taking place, right? So, this is the reason why you have all of this, you know, trading information that's very basic, because if you follow that information, it's pretty much guaranteed that you're going to lose, right? And if you lose, that means they win because they're taking the other side of your positions. So again, let's come back to the charts right here. People see the market opens up lower right here and it broke lows here, 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 and here. The average trader is thinking it's time to sell. The moment you push this S right here, this sell button, and let's say you put $100 on this trade, the $100 goes from your balance and it goes wherever you put your stop loss at. Okay. Now, most people that take trades, they're going to put their stop loss above old highs right here. Okay. So now that means that instead of this $1,000 here, now you got $900. Okay. And now there's $100 resting right here in the form of a stop loss. Does that make sense? Now, I want you to imagine 500,000 people doing this. Okay. Like, because it's not just us on a Zoom call. You know what I mean? It's people all over the world looking at Nas right now at this moment. All right. So if there's people that's risking $5, $100, $1,000, $500, $200, like this little pocket of money is very lucrative for the institutions to manipulate now. Because if they drive the market up and knock out those stop losses, now that money is taken from you and now it's available in the financial markets, right? As liquidity that they can add to their sell right here. And I know the chart getting a little messy, right? But now once you lost, this is another $100 that they can add to their sale once the sale is ready. All right. So this is why market manipulation exists. This is the reason why you take a trade, you lose, and then the market goes the way you always knew it would go, right? You have to understand the market manipulation game. So this is why my strategy entails me looking for what the average trader is going to do first, and then I align my strategy with that. All right. So if that average trader is looking at market structure from a very simple-minded perspective of seeing the market makes a new low, and then it'll probably make a lower high here because the market lower low, lower high, lower low, lower high. That's how they think the market moves. So if that's what the average trader does, I'm not going to do that. What I'm going to do instead is I'm going to look for all of the traps. All right. So now let's identify some traps. That is a trap. All right. Now, why is this a trap? It's called trendline liquidity. Okay. Now, this is called trendline liquidity because most people that use trend lines, they connect 2 points and drag it into the future. And every time the market hits that trend line, they're going to take a sell, right? So when the market comes up here, there's going to be a lot of people that take another sell here, which is going to put more money above those highs, right? So that's one trap that we got to pay attention to is the trend line liquidity. Other trap we got to pay attention to is this trap here. We got a strong high. So that can also be a trap, right? Because it's a strong high, but it's kind of not when you look at the weakness in that high. So now we know there's more money up here also. Then obviously we got the impulse down. A lot of people are selling currently. So truth be told, I mean, market could even do this, right? Market could even come a little bit lower just to make the sellers think that they're right. And then we probably get that manipulation up there. All right. So now that we identified multiple types of traps, now we know where we want to get in. I want to get in around 27,345. All right. Anywhere like there and above is where I'm willing to get in. Okay. Now, again, the market dropping here means nothing to me. Okay. Market's just opened. This is something I'm looking for primarily. London, preferably New York, but if it happens for London, I can accept that, right? But I'd like to see this happen during New York session. So for all we know, the market could do this. It could play around all day until we get to 9:30 Eastern. And then if it comes and takes those highs, then so be it. However long it takes, it doesn't matter to me, right? Because I'm looking at the level. All right. How long it takes don't matter to me. All right. So that's what I'd be looking for on NASDAQ. Let's take a look at gold real quick. All right. I spanked gold the other day. Um, I did a video on this too. I documented it live. So I'm excited to release that. I got to edit it up. I need a video editor so I can get this stuff out in a timely manner. But yeah, I recorded this. It was dope. All right. But even this, right? This happened. You see it pushes into the Hezi. See then we got a Hezi crossover. Market pushes into the Hezi, reacts. It came and broke highs, and then it shifted back down, which I kind of thought was weird at first, right? But what I ended up noticing is like, okay, market market is just respecting supply at this point, right? You see, we got a Hezi crossover right here. All right, this is a hesitation crossover. Market pushes up into it, into that supply zone. right there. Boom. All right. So now we got a strong high. Market hesitates, crosses over. All right. So now I knew that this was internal range liquidity. Okay. So this is how I knew the market would make a new low. All right. And I want y'all to really pay attention to this because the Hezi crossover, as well as strong highs and weak lows, is what gives you directional bias, right? Everybody focuses on market structure. Market structure is subjective to the time frame that you in. So how do you really know what's trending that you in? Market structure is a scam. I'm gonna be honest. If you trade in market structure, you'll be right sometimes, but when you're wrong, you're not gonna know why, right? Because you're gonna be like, well, why the market ain't just keep going in this direction? I'm trading with the trend. It ain't about that. It's about understanding liquidity, right? I got a strong high here. You see it? Strong high. Strong high here, strong high here. You see that? And then after the strong high, I got a bearish footprint, aka bearish fair value gap, bearish imbalance. Then I got a Hezi crossover, right? And after the Hezi crossover, I got a weak low down here, all right? You can tell that the low is weak by the way these candles are forming. The reaction is weak, so the lows are weak as well. So when the market retraced in to take out this internal range liquidity, I knew we could take sales. So I took sales in here, took some more sales. The market dropped. I ended up partialing out. So we was already good for the day. Market retraced, but that's cool because it kept maintaining my highs and then the market just melted. Right? I was in this trade way longer than I wanted to be. I like to be in and out within like an hour or so, but this one made me wait. I ain't gonna lie. This took like 3.5 hours. But at the end of the day, I still had my target set. These weak lows was my target. This Hezi crossover was my entry. Period, point blank. All right. So we came and snatched those lows, took them out too. And that was an easy, like 1 to 8, 1 to 10 type of trade setup. So now what we got? All right. Now that we came down, took these lows, what we see happening now? All right. Market got a Hezi crossover here. Respect demand. All right. Market pushes up, makes a higher low, shoots up. But what do you see? There's not really a Hezi crossover here, right? Now you do have a Hezi here. That's a Hezi, but the market crossed over before the Hezi formed. You see that? You see how we break structure first before the Hezi forms? So that's probably why the market is not going to respect this demand zone. All right, because the Hezi crossover, it was a crossover Hezi. It wasn't a Hezi crossover. So you want to see the hesitation before the crossover takes place, kind of like this here, right? You see you got the hesitation before the break of structure, and then the market respects that Hezi and then goes up higher, right? So this time you got the crossover first, then the Hezi. So now this low will probably go, right? And when this low does go, I believe that's probably where you want to start looking for some buys, all right? Here, we even got an impulse here. Now, you know how I feel about them impulses. I think they always get ate up for the most part, right? So I would personally be looking for this here. Look for the market to go a little bit lower, all right? And if it don't react from here, it'll probably go a little lower and react from down here. But I am expecting some sort of reaction from down here in these areas, all right? Because again, we did get the Hezi crossover there. So that would just be an area where I take a jab. Now, look, if the market keep going lower, so be it. It's not the end of the world. It's just about strategically taking jabs in particular areas, right? So I'm not here to say this strategy gonna be 100% every day, all of that. That's not what I'm here to say. I'm here to take strategic entries, right? I'm pick my battles wisely. So that way, when I do take a trade, the risk to award can be 1 to 10. And I can make a 10x return possibly on my investment. Now, if I say, let's say I partial out, cool. I'll partial out at 1 to 10, hold or 1 to 3, and I hold the rest for 1 to 10. That's cool. I still pocketed what, 6.5 return on my investment. You know what I'm saying? So regardless if you hold the entire trade for 1 to 10, or even if you partial out, you still gonna make good money to the point to where you only got to be right 2 out of 10 times to be profitable. That's my goal, right? I'm picking certain areas of the market. I ain't even got to catch every move. Sometimes the market move without me, and I'm just like, oh well, because at the end of the day, if I can't get my risk to award the way I want it, I don't even want the trade. You know what I'm saying? I don't want to lose money unnecessarily. And if I do, the reward got to be worth it. All right. So keep that in mind. I'm looking for the market to go a little bit lower, and I'm going to expect some type of reaction out of these lows being taken. All right. Let's go back up here to some currencies, see what we got. I ain't trade currencies really none last week. I mean, GU was a bit of a mess, and it's a shame because I like trading GU, but this is all we got last week. Like it was a mess, bro. Like markets opened up here, and this was all the price action we had an entire week of trading GU. So I literally didn't touch GU last week, and this is like one of my favorite pairs. So it's pretty unfortunate, but until GU start acting right, I'm not touching it. I still don't see nothing that really interests me on this. I could like force myself to see a hezzy crossover here. Maybe this is a prolonged hesitation and this new low is a crossover. So maybe the market wants to come back to clear out these highs and drop. But there's better setups out there. I don't have to force it, you know what I mean? But if I wanted to trade GU, that would probably be the move. But there's other pairs out there to trade. We ain't gotta, force a setup just cause. Um, Euro wanted to sell right here. The market didn't quite get there. So ended up sitting out on Euro all week last week as well. So we're gonna do a quick rundown of some of these currencies, just so we can see if there's anything worth taking. All right. So Euro JPY. We still got this hezzy up here, all right? Still got this hezzy up here. Market hasn't came up to it yet, and that's okay. It doesn't always happen the moment you think it will, but just keep extending those levels out into the future, and you should be good, right? Whenever it does get there, that's when you execute. We got some pretty weak highs here, so I could see the market being attracted back up. Um, Market will probably go bullish, for a little while until we get to about 187.55, 187.55 on Euro JPY. All right. We're gonna keep it pushing. All right. So if I just had to take a look at this here. All right. So it looks like we got the potential for a strong high here. Here. Okay. So let's look at this closely. All right. So the market took highs here, as you can see. Then it went lower, obviously, went lower, right? Market has a little imbalance right here that gets filled in, all right? Then after that, market hesitates here, crosses over bears, right? So got a little hesitation here. Then the new low is the crossover, all right? So I'm gonna take the high of the hesitation, draw that out into the future. Take the high of the hesitation, draw that out into the future. Okay, we just tapped into it. All right, so since we tapped into it already, see if we can get a continuation somewhere in here. This is pretty ugly though, I'm not gonna lie. All right, so when I see us tap into a level, but I don't see a re-entry opportunity, that usually means that the market is going to run those highs one more time, right? Because we tapped into the level, but I don't really see a clear area to draw, another zone from for a re-entry. So if you don't see that, what tends to happen is you'll get one more run of the highs, all right? So I believe that we'll get that right there on Euro JPY, all right? So look for 1.642. 1.642 on Euro AUD. All right, guys, keep that in mind. This is being recorded. I'm just trying to hurry up and get through these currencies. All right. Um, Euro CHF, that's pretty ugly. No need to trade that. Same with Euro CAD. I'm not really seeing much there. All right. Euro GBP, the one time it gives us a decent move, I end up missing it. That's funny, but all good. All good. Let's go over to our GBPs. GCAD. GCAD. I'm gonna defer on that one. AUD is a mess. I mean, you see the price action on currencies lately, and I mean, this is just a visual representation of, unfortunately, what we're dealing with across the world right now. It's rough. You know what I mean? The entire world is kind of, whacked out right now in terms of what, um, the markets really want to do. Um, just this war looming, the potential for World War III, like it's a lot having an effect on the markets. That's why over the past week there's been little to no movement pretty much across the board, right? So, you can go on a lower time frame and still find opportunities, but it's also important not to, force nothing either. If the markets are a mess, they're a mess. You know, see the same thing here. This was a week of AUD CAD price action. So this is what we've been dealing with, y'all. So I just want you to know if you're trading in this environment, I mean, you can look at it one or two ways. You getting your practice on, all Madden mode. You know what I mean? Like, is that what they used to call it? Y'all played Madden? Like, it's all Madden. That's like the top difficulty level. That's pretty much the type of markets that we in right now. Like, this is the top of the top difficulty level. So if you understand how to trade in these environments, you're gonna be straight whenever the markets do get back to normal. So even being able to catch something like this, strong high, hezzy, right? Hezzy, crossover, weak lows on a crossover, strong high, weak lows, that gives you the directional bias. Hezzy crossover gives you the point of interest. Boom. Like then you can start catching little stuff like that and you get good at it. You know what I mean? You just get good at training your eyes. So that's what we're here to do. Do your best to train your eyes. So something like this. Okay, strong high. Internal liquidity here. Mark that up. Market hits it, drops lower. Market will probably keep pushing down, but at the same time, it's just not a trade that I'm interested in. You could see something. That don't mean you gotta take it. Some of these setups still ugly. Same with AUD, JPY. Yeah, all of this shit is ugly. So yeah, guys. I mean, we might start the week off a little slow. Um, Obviously, Trump will do something before the end of the week to, wake the markets up. It's bound to happen. So just give it a little bit of time, let the markets wake up. But for now, again, I will be looking at Nas to make new highs, and then let's start looking for the potential for a drop. All right. I'm looking for gold to push lower and then react out of these lows. Okay. And again, if the market pushes up higher right now, don't trip because time of day is important too. I'd rather this low get taken out late at night, early in the morning. I'd rather that happen than, 7, 8 o'clock in the evening anyway. So I'm cool if the market starts going the other way early. I don't have a problem with that. All right. And then obviously we got Euro AUD. All right. Euro JPY. Still got to push up some. Euro AUD. And that's about it. We'll start there. And then we'll see if there's anything else that the markets, want to give us, later on. All right. Real quick, let me check the chat. Um, I graduated on. Oh, you graduate on Saturday? Congratulations, bro. Y'all give a shout out to Jay Smith, man. Graduating. Is that the Jay Smith from Cali? I want to make sure I'm talking about the right guy. Congrats.
Chicago.
Say what?
From Chicago.
Chicago. Okay, okay. I know a few Jay Smiths. I just want to make sure. Congratulations, bro. Oh, that's big.
Well,
Um,
I appreciate
we say caught some nasty entries thanks to the teachings. Hey, man, that makes me happy, bro. I'm glad that you're seeing some results. A lot of y'all been catching some nasty entries. I seen Sam caught a 1 to 32. Absolutely disgusting. 1 to 32. Just think about what that could do for you guys. Like, you catch a 1 to 32, you should really be in profit for the next 3 weeks. Like, unless you're just over trading like crazy, you should be like at least the next 2 weeks. You should be trading with nothing but house money. There's people on TikTok trading right now. Let them do what they do, man. I'm not saying you can't do it. It's just, you get the better entries. Like you can always scalp though. Like I'll trade on a lower time frame anyway. So if you see something, you could take it. It's just I prefer to get the higher quality zones and stuff. Um, 1 to 37. Look at that. Look at that. Go crazy then, bro. Go crazy then. I need a signal. I don't think I caught a 1 to 37 in a little minute. Shit, give me a signal. But no, I'm glad you guys are seeing results, man. That's what it's all about. One day at a time. You know what I mean? Just chugging away and getting better and better. And not being afraid to take a chance, guys. Like my philosophy on trading is all about, being willing to and able to take a chance. One thing about trading psychology is that a lot of times, unfortunately, when it comes to trading psychology, we try to prevent ourselves from being human, right? Not realizing, like, bro, there's only so much you can fight FOMO. There's only so much you can fight fear. There's only so much you can do to suppress human emotions because obviously we're human. So, what if your strategy could help assist you with your psychology, right? We always say the psychology is more important than the strategy. I feel like the discipline is more important than the strategy, but the psychology is a reflection of your strategy. All right. And what I mean by that is that if you're taking one-to-one risk to reward trades, your psychology can only be so well or so good because your profitability is going to be predicated on you winning more trades than you lose. So there's always going to be stress on your shoulders. There's always going to be stress in the back of your mind because you know that you have to win the next trade to make money. You have to. But what if you were catching 1 to 10s, 1 to 20s, 1 to 32, 1 to 37, like some of the people on this very call? Bro, you're gonna take a trade here, take a trade there. You're not gonna give a shit because it's like, bro, I can lose 5, 10 times in a row and still make money on any given trade. And not just make money on the trade, but make up for the losses as well. So now I have more of a carefree attitude. It's almost like if I was a billionaire and I just wanted to go buy stuff versus you got your last $1,000 to your name. You're thinking about every decision and every purchase that you make versus knowing that the money is going to be there. All you got to do is keep trading. You going to make the money. It's going to appear at some point, win or lose, you going to make it. So it's like, I feel like too many people put such an emphasis on trade psychology, not realizing that if your strategy sucks, your trade psychology is only gonna be so good. Like you can't have perfect trade psychology with a shitty strategy. You're just gonna be a delusional person thinking that I'm gonna make money one day and discipline is gonna get me there. Bro, if your risk to reward is trash, there's not enough discipline in the world to make you profitable. But on the flip side of that, if your risk to reward is phenomenal, you can actually lack discipline and still make money. You see that? You see how that works? So, for all the people that kind of just try to willpower their mentality and willpower their way to profit, maybe you need to take a look at your strategy. You know what I'm saying? Like, I get it. Trading is 80% mental, but that's once you got the right strategy. If you got the wrong strategy, it's really just like 10% mental because you can't think yourself in the profits. Does that make sense? Once you got the right strategy, then it becomes a mental game of trusting the numbers and trusting the risk to reward. But if you ain't got that on your side to begin with, you know what I mean? It's like it's like thinking the Division 3 school can beat Ohio State in a football game by just being mentally tough or just being by just having a good positive attitude. It ain't gonna happen. Just some shit just ain't gonna happen. It is what it is. And we got to get out of this fairy tale world if you want to be successful. Trading don't give you a penny more than what you deserve, bro. And it's one of them industries where you can't smooth talk your way to success. You can't use your good looks. You can't use personal connections. You are only gonna get what you deserve in trading due to strategy and execution. That's it. So you have to take every edge and every advantage. So yeah, that's my little rant for the day. Let me go and check the chat one more time. Let me see. Okay, cool deal, cool deal. But look, I appreciate y'all for hopping on the call this evening, man. If you guys got value from this, feel free to give me a follow here. This is my Instagram, Wall Street underscore Ray. Let me know you was on the call. I'll show you guys some love back. I definitely appreciate y'all for taking the time to craft up and sharpen that iron on a Sunday. This is how you get prepared for the week, man. You stay ready. You ain't got to get ready. All right. So with that being said, I appreciate y'all. I will see y'all later this week. This is the free weekly outlook of the week. So this is one call for, everybody, but if you're in Trade Genius, you know what it is. I'll see you this week and let's have another profitable week. All right. Much love. Peace. See you guys on the next call.